I'm not angry at Meta for going from 213 to 516. I got angry at me. Meta didn't do shit. Meta doesn't even know me.
Well, they definitely know definitely know everything about you. That's for sure.
No, what I'm saying, that's true, right? No, sure. So let's get started with the scoreboard a bit. So total premiums collected 65,790. Total open collateral is 311,500. Open P&L on shares owned is 2,400 to the good. So all in all, up 68,190 bucks in about 2 months.
So real quick, for the people that don't know what this segment is, this is where TJ and I take 500,000 of his about $5.5 million portfolio, and we wheel it. And what does wheeling mean? It means we sell options, puts, and calls on the equities we own. So the way to read this, we have used 311,000 in collateral. We've given that to our brokerage. The brokerage gave us back 65,000 in premium. And eventually, if we win on these contracts, we're going to get that 311,000 back. And we use that to make that return, which is about a 5% return. And it's not bad in the past 2 months.
No, not at all. And then this is how it happened. Hood's responsible for 16,265. Shop's responsible for 7,445. TSLL's been really good at 8,900. Hims, I need to talk to you about that one a minute. It's at 6,750 because I made a trade without you knowing.
Okay.
NVDL was good. That was that earnings play that we did on that leverage play on Tesla. 685. And then Path is good for 1,230 in premiums. And there's obviously 2,000 shares owned there. There's 300 shares owned of NVIDIA, and the premiums are good for 3,465. Snow's good for 2,720. And then INTC, there's 2,500 shares there, but it's also good for 2,330 in premiums, which seems high, but we'll have to verify that. I think it's because I bought 2,000 shares outright of Intel. We'll look. And then you gave me that play on BITX, the leverage play on futures for Bitcoin.
Yes.
And that brought in 16,000. So we've got, it's all there. It's all documented. Now we'll go to the actual portfolio and go from there. But what are your thoughts so far? I mean, how do you feel about the performance? Because we have left some money on the table as well. If we would play shop a little bit differently, we could have an extra $7,000 to $10,000 here so
far. I like it. I think at least, we've been able to navigate the position the way we have, and 65 on 311 is not bad. We did it on the tickers that we know pretty well. And yeah, we definitely left some upside with shop. But besides that, I think we're doing not bad at all.
I hear you. So let's go over the open positions, if you will. We've got the Intel covered calls. So all 2,500 of those shares are for sale at $31, expiring on 7/12.
And this one has been so interesting because Intel's literally been stuck between 30 and 31. So it's actually done. Well, we might end up keeping these shares.
So right there, that substantiates the money that the spreadsheet said, 2,330 bucks. That makes sense. It's all right here. So it's just covered call premium that we received. This was a buy right strategy, guys. We didn't actually enter into cash secured puts. Intel was it was in the go zone for us. So you're like, hey, buy 500 shares. I looked at it. I studied the charts, and I'm like, no, we're buying 2,500 shares. Yep. Because it was just, I felt like the downside was so, it was like we're practically already there unless the house had a basement. And I just felt like the upside was a lot higher than the downside. So that's the kind of risk reward that you're looking for in the market that doesn't always get presented on a regular basis. And I wanted to take advantage of it. But I also know that I don't think Intel is going to $50 or $60 tomorrow either. So it makes it very compelling to sell very aggressive cover calls against these shares.
Right. Yeah, and I like this one as well because I wanted to finally have some ownership over shares. So what we did, guys, here is we bought 2,500 shares. I wanted 500. TJ was like, nope, we're doing 2,500, which I like because I'm pretty convinced on Intel, given I've been studying them for about 6 months now. And we sold a covered call at 31 bucks, which means someone paid us premium to bet that Intel would be 31 by July 12th. Intel's been in a pretty aggressive range, a rigid range of 29 to 30.9, which is why I picked 31. and the premium is good. If it does get called away, we can roll it. Well, I mean, we can roll it before we get called away. But if it does get called away, we're not that emotionally attached to Intel. But there's a lot of other places to put the money, so it's a nice 2,500 cash grab within a month.
And you just said a mouthful there, Amit. What makes this whole thing work is that we're trying to keep the emotions out of it, and we're just playing a game of math. Do we like the stock here? Yes. Do we love it? We're kind of indifferent. So we're just literally just going to focus on the numbers and let the numbers tell us what we should be doing with these positions versus, oh my God, I'm so in love with Intel. It's got to be part of the portfolio because I can't go to the bar because they're going to know that I don't have Intel. And like, we're not playing any of those silly emotional mind games and screwing ourselves out of returns.
Right.
It's kind of like, okay, cool. If this one gets away from us, we'll put the money in Hood. We'll put the money in NVIDIA. I mean, there's other places that we'd probably rather have the money. This opportunity just kind of presented itself. And that attitude really serves you well whenever you're selling puts and calls.
Right.
So now let's talk about NVIDIA. There's a strangle going on here with NVIDIA, covered strangle, just in real basic layman's terms. It's whenever you own shares and you're selling covered calls against those shares, and you're also simultaneously have open cash secured puts. So if it goes up, your puts are going to be printing, your shares are going to be printing, but your covered calls are going to be challenged. If it goes down, your cash secured puts are going to be printing, but your cash secured puts are going to be challenged. Your covered calls are going to be printing, and you're going to be losing money on the shares. So you're guaranteed to win one side of the trade, and you'll manage the one that's going against you. So in short, that's a covered strangle.
So we bought 300 shares at 132. So we're down 1,600 on the shares themselves.
Correct.
And
strategies.
Okay, so let's start with the call, I guess, the 140 call.
So we've agreed to sell the 300 shares at 140 Amit and picked up $1,155 for doing so. And I like our chances to hold on to these shares and rinse and repeat and keep bringing some more premiums through the door, but also with some upside because we own those shares at like 132 bucks.
Right. So it'd be $8 a share if we ended up having to sell them.
Correct. And then there's also, we liked it outright at 132.12. It stands to reason that we should be willing to buy more at 125. So that was the contract that we entered into. We're like, well, let's put some money up for 700 shares worth at 125. And the market paid us for that. And we picked the same strike price to initiate the covered strangle. And that was 712. So we tied up the $12,500 times 7. That's your collateral. And for doing so, they paid us $2,310 as well. And these have obviously been challenged because NVIDIA has been under 125 for a minute, but now it's had a nice little bounce back. So now we're essentially in that sweet Goldilocks zone. Do you want to speak a little bit on the Goldilocks scenario here?
Yeah, so this is really interesting. So basically, guys, we bought 300 shares of NVIDIA at 132. We sold a covered call at 140, but we sold a cash secured put at 125. So we need NVIDIA to be above 125 to not get assigned the shares in the cash secured put, but below 140 to not get our shares called away on the covered call. So there's a $15 spread of the Goldilocks zone where if we're at any price by the expiration of July 12th on both of those, then we get to keep all the premium that we collected and keep our shares and not have to buy another 700 shares, which is not a bad scenario.
So, and that's the beautiful thing about having a high conviction stock, Amit. It's whenever we entered into this scenario, we were bullish enough overall, at least for the next 3 to 5 years. I think that's the lifespan of NVIDIA at these levels. That's just me doing my own personal calculations.
Yep.
Could totally be wrong here, guys, because there's a lot of companies that are like, okay, we feel like we're kind of getting taken to the woodshed by paying all of these, all of this money, inflated money to NVIDIA because we can't get our shit together and make our own chips, right? That's essentially why NVIDIA is NVIDIA. Because they're like, we got the best chips. What do you want to dance with us? You're going to have to pay a premium, right? So then there's big companies that are like, hey, we can use our intellectual property and try to figure this shit out, circumvent the system, cut you out. But that's not going to happen right here, right now. It's just not. I don't care if your name's Apple, Meta. It doesn't matter. It's not going to happen right now if you want to maintain the same quality that NVIDIA is offering you with their overpriced chips, if you will. So I think they have 3 to 5 years of being able to control the market prices, in my opinion. So I think that this play can be here for a pretty good while.
I think so too. I mean, if Nvidia, look, the Nvidia had a little bit of weakness during the week. It fell to 116 and everyone got scared and that dip got eaten up so quickly. I think we would have to worry more about our covered call than the put, to be honest, but it could go either way, So regardless, if we have to buy more shares, it's Nvidia. And if we have to roll the contract, we're fine with doing that because we want to hold on because it's Nvidia.
Exactly. So it's, I just think it's an awesome scenario and we didn't go so heavy. So a little teaching segment here is, even though it's super high conviction, we also know that we're kind of playing at the top of the market as well, right? Because what's the all-time high with Nvidia? About 140 or so?
Yes.
So
Yeah.
it's like 140 and some change, right? Because these covered calls, I think, were in the money for a hot minute during this time frame.
Yep.
So we're not really in a hurry to aggressively add to this position either. It would almost be kind of nice for us if Nvidia were to go to like 110, 115, 110, because then now we can have a more substantial position in Nvidia at more favorable prices. So I like the way that there was discipline here, and we didn't go all crazy buying 1,000 shares outright at 132, knowing damn well that in our minds, that's not really a great price. It might prove to be a great price 3 to 5 years from now, but it's not really a great price today.
Right. 2 comments here. Daniel says, also, if you were assigned the 125 shares, it'll lower your average. He's correct about that. Then you could sell calls at a lower price and receive a higher premium. Yep. So what he means by that is that 132 average, we have to sell a call above 132. Otherwise, we're losing money. So if we have to buy 700 shares at 125, maybe I think the average goes to like 129, 128. If that's the case, we can sell a call at 130 or 132 because now we are above the average. And Bruni asks a question: is the strangle another way out of covered calls that are in distress?
Yeah, it requires a lot of capital. The easiest way and the cheapest way, the most capital efficient way to protect against your covered calls going to the moon is to buy some long calls as a wraparound. Because you don't want to cheer against your stock ever, because that's counterintuitive, right? Like, why do you want to cheer against your stock? So protect yourself to the upside by buying some long calls as well. So I always like to wrap the strategy around when I already have a full position and I want to continue to sell very aggressive covered calls. I want to have some long calls in place, some leaps in place. And then if things are really going sideways, I can kind of make some timely moves and sell covered calls against those leaps as well. That way I'm not just out that money, because I'm the casino. I want to collect premium. But in some instances, it does make sense to put out some premium as well as an insurance policy, because that's really what buying calls and puts is designed to be. It's an insurance policy. It's not a fucking lottery ticket. The lottery ticket aspect, that's when you're acting like a gambler at a casino. We're operating as a casino and as an insurance agency.
Yep.
So it's a totally different mindset using the same instruments.
100%.
So there's that. Want to talk about another one?
Let's find another one here. Let's do Snowflake. So we took some money on Snowflake.
Oh yeah, let me type this one. And I was happy to do this, dude. I saw the podcast on Cash Flow Chronicles, and Chris Patel, the resident Snowflake bull, turned into a very bearish. Looked like the bear came out of hibernation. You know what I'm saying?
He realized, hey,
why don't you just say you screwed the pooch and you'd rather be in Palantir? But he's not willing to accept defeat. But as the Proverbs goes, probably goes before the fall, right? So anyway, we collected 3,400 on $120 puts, 719, 10 of those. So we tied up 120 grand essentially. June the 14th to 719, so about a 35-day trade, give or take. And then yesterday, I reached out to Amit, and I was like, dude, we're sitting at like 80% profit right now. We closed it out. We can give 680 of these dollars back, lock in the win, and take the $120,000 off the table, because I think fundamentally things have changed a little bit with Snowflake, because they're fighting with this other company called Databricks and all this other stuff that Amit probably knows a lot more about. And essentially, Chris confirmed what I had suspected the whole time, because I've actually, what you guys don't know is I've invested about 40 hours of my life studying this damn company right here since it went public. And I concluded about 2 or 3 months ago that I don't even think they have a moat. I think what they have is a lot of popularity.
Yeah.
They have a lot of people interested in the company, but what it really is their moat. But I don't really, that's not my strong suit in the market, is to make those determinations. But when Chris Patel substantiated that he doesn't even think that, or at the very least, the moat is being challenged if they even have one, I'm like, dude, I am outies, bro. like the conviction went from like a 2 to like a -6. You know what I'm saying?
Yeah, I mean, and the thing is, our strike though at 120, I still think that's a great strike. It's just the reason we closed it is because we're up 80%. Why would we wait for an extra 20% in 2
Right.
weeks? You know, so
Yeah. So I like it. But I like it more like at 100 now. So I'm kind of like the way Chris Patel looks at Palantir, because he's in the chat right now if you want to pull him up.
yeah,
So
there he is.
it's like, I think he likes Palantir like sub 15. You know what I'm saying? So I'm like, so I'm the guy now with Snow that I'm like, give it to me at 100 and I'll get in. But to me, price matters, entry point matters as well. If the conviction is not as good, well, then give me a good valuation that I can stand behind.
Yep.
Like for me, right? And then we all have our own styles. So it is what it is.
Let's look at Robinhood. Let's see what's going on.
Robinhood's a good one, man, for us. I kind of wish we'd already picked up some shares, but it's also, again, you don't want to be in a hurry buying over here at the top, because that's how bag holders are created, right?
Yeah.
So Robinhood has been.
I don't even remember, what do we have open on this? We have puts, right?
Yeah, we'll get to it. So we started in April of 26 with Robinhood, brought in 920, we brought in 360, selling over here into $17 and $16 range. So keep that in mind. We had opportunities here to scoop up some shares at much better valuations, right?
Yeah.
And then we bought to close those. We gave back 30. We gave back 132 of these premiums right here. And then we got into it again. We sold 20 more contracts, collected 940. Sold 5 more contracts, collected 295. Sold 20 more contracts, collected 1,060. We bought to close, so we gave back 300. Sold more contracts, collected 1,300. Bought to close those, 280. This was the 1550s over here, so we realized a win there. And then we sold on May the 28th, we sold 20 more contracts at 1850. So we've been following this thing up by increasing our strike price and bringing them through the door, indirectly participating in the fact that Robinhood is going up and to the right. Brought in another 1,080. And then we went a little bit more aggressive and sold 100 contracts at $20, 94.20. So obviously, just looking at this right here, Amit, wouldn't you say that it would have been a better idea to sell 100 contracts over here at 16 and 17?
Yeah. But it just would have been a little riskier because Robinhood hadn't broke out above that $20 range yet, right?
And you were waiting on some key data.
Yeah. Yep.
It was fundamentally something that you were waiting on. You're like, let's wait on these numbers, whatever those numbers were, because I don't know the story the way that you do. But you were waiting for a certain date to happen, and Vlad was going to announce something. And whenever that happened, that's when Robinhood started matriculating up and to the right a little bit more.
Yep.
So it's like they say that the charts tell a story. And then the story should be like an overlay on the fundamentals of the company, right? So there's like a binary event here, and then there should be like a little spike up or down on the actual chart itself, and that kind of checks out with Robinhood, if you will. So there's not really a disconnect there. The story got better, the numbers got better. And then we bought to close these right here, so you'll see that we were collecting a lot of premium down here. And we gave back very little premium to free up the shares, gave back $1,100 over here on the 20. So we collected 94.20. We locked in the win by giving back only 1,100. So that's a realized win right there, if you guys can see that. Collected 9,400, gave back 1,100.
And that's in 2 weeks. 8,000 in 2 weeks.
Not bad, right?
Not bad.
But it's also using $200,000 in capital just to keep the context, right?
Correct.
And then we bought to close, gave back another 100, and then we're like, okay, well, let's do it again. So because there was a little bit of a pullback, so we did 50 contracts. We only got $60 this time per contract, so we picked up another 3,000. So it's half the position that we had over here, but we're also not collecting nearly the same amount of capital as well. And that's where we stand open with Robinhood, Amit, is we've got those 50 contracts at $20, and let's see how those are actually doing right there. We're at about 53% profit.
There we go.
And there's the
Not
three
bad at
points.
all.
So how do
And
you feel about it? You like it?
I think it's great. I think, dude, I'm getting so many messages every day of people that are transferring from Schwab, and they're bringing a lot of money, bro. I think this Q2 earnings number is going to be intense. Also, we got an upgrade to $29 from Wolf Research 2 days ago. And I think they talked with the CFO, and I'm pretty sure during that dinner, the CFO told them, like, you guys know what's about to happen here. And they're like, all right, we got to upgrade the stock. So I think we're going to be good.
So, Amit, on this channel, since we started this, this little podcast, if you will, on wheeling on your channel, which I appreciate the platform, by the way, because I think this is a way to help a lot of people know that there's a very consistent way to make money. It's not going to be oversized returns like, doing debit spreads and things like that. But this is just slow and steady winning the race, having a legitimate strategy in place that you can do over and over and over again that doesn't take as much brain power, but it does take capital.
Yep.
So it's like on the one hand, we do debit spreads, takes less capital, more mind power, right? You got to really, really know what you're doing and see these asymmetrical opportunities in the market. Or you're like, well, I'm not that smart, but I got some capital. I can use more capital to make steady returns and eventually, get there. It's going to take me a little bit longer. Just to call a spade between the two strategies, right?
Yep. 100%.
So Path dipped like 30% or so after earnings, and I thought it was a good idea to buy the dip. So I nibbled over here with 1,000 shares at $13. So it put out 13,000. So it was a buy right strategy. Immediately sold the cover calls against it, picked up 200. And then I went heavy and I went 100 contracts at $11, picked up 4,000. A couple of days later, I gave back 2,800 because I wanted to realize a win of $1,200 there to create a cushion in the position. If that makes sense.
Yeah. Yeah.
And then I kept selling covered calls against these shares because these ended up expiring worthless. Sold the covered calls again, brought in another 130. And then I was like, well, let me sell more cash secure puts at 11. So we brought in 280. And then I was like, let me average down on the shares because things aren't really looking too good at 13. So let me get another 1,000 shares at 11.31. So that brought the average up, or the average down to $12.15, where we stand today on 2,000 shares at $12.15. But then I sold covered calls at $11.50 that are currently underwater, but I did bring in $3.90 for that. And then I sold covered calls at $12.50 that were underwater this morning. I don't know if they're underwater right now at $12.50, both expiring on 7/12 for $2.40. Because we've been underwater on cash secured puts before, but we haven't been underwater on covered calls until now. So let's talk about Path. You were a little bit reluctant the whole way through, even after the plummet on the pricing plummet from earnings.
Right.
How do you feel now that these shares could all be called away right now if it stayed above 12.50, and we could fast forward the clock to our expiration dates at 7/12?
Well, the problem is the ones at 12.5, that'll be a win, but the 11.500 shares that get called away, 1,000 shares, that's not good.
Well, technically it is a win because I bought those shares at 11.31.
Okay, gotcha. So it would still be gotcha.
But collectively, it's not a win because our average sales price here would be $12.
Right.
You follow me?
Right.
And we're in it for 12.15. So that part's not a win. But what is a win is all the premium that we collected along the way. And we also can't forget that we were down probably 1,500 or so at the low end, or, whenever shit wasn't going our way, we were also down about $1,500 or $2,000 collectively on the position. So how do you feel about it? Because here's the real big teaching segment for people. This was a trade from day one. This was not an investment. This is a very low conviction play. Could we agree on that, Amit?
Yeah.
Because if it was a higher conviction play, it would be a bigger position. So if you're ever curious as to whether or not you think you have a high conviction play or a low conviction play in your portfolio, just look at the weight that it has in your portfolio. If it's a low weight, I don't give a shit what you say. Your actions are saying that it's pretty low conviction, at least at those prices. I'm just saying, because I don't look at what people say, I look at what they do. And based on our actions here, Amit, this is a very low conviction play. Because I mean, if the shit was trading at like 18, 19 bucks and then it plummeted to like 11, if it was high conviction, we should have 5, 10,000 shares in the portfolio. That stands to reason in my mind.
Yeah, I think Path was a cash grab, and we got a little stuck on it, but we navigated that, covered calls, puts, averaged down, and so now we're in the green. The thing about it is, as you said, it was low conviction. So if it was higher conviction and it fell to $8-7, we would have loaded up. Because it wasn't, it's kind of one of those plays where, all right, we make $1,000 or whatever, and we move on, right? Because we didn't care too much
So
about
if we look at the scoreboard though, Path is actually good for 1230, but it's more than that. I feel like that's actually a little bit off for some reason. We'll have to look, right? So I think what we can do here, Amit, is if you want to play a little bit of accounting, this is just a game of addition and subtraction at the end of the day, right? And there's only 6 or 7 transactions here. So all you do is we add up all the premium. So the premium is, do you have a calculator handy,
Yep.
Amit?
Yeah, I got it.
So we can see exactly how much money we're making. And if we're okay making that amount of money, because at the end of the day it was a cash grab, then I feel like we should be cheering for these shares to stay over 1250 and be done with the position. Because we can exit stage left with a nice win. So add up the 200, add up, this is a realized win. So add up 1200. So we're at 1400 to the good.
Yep.
Add 130.
Okay.
Add 280.
All right.
Add 390.
Okay.
And add 240.
2440.
Okay, that's our realized premium. And then now we bought the share. So keep that number, like lock it in, right?
Yep.
So then now we bought 2,000 shares for 1215. That's our capital outlay for the share. So that's a number, whatever that number is.
Yeah.
2,000 times $12.15. And we've essentially agreed to sell those shares for $12 collectively.
Right. Minus 24,000. So that would be a 300 net loss on that. So it would go 2,400 minus 300. Our realized is 2,100. That's our net.
Right. So whenever I got into this trade and I'm like, hey, guess what? Because I announced it on your live, right? On the chat. And bought 1,000 shares of UiPath. Hadn't done any work on it whatsoever. This was just literally, it dipped, and I'm like, maybe I can get lucky essentially because I'm not going to do any work right now. And I was listening to the earnings call or whatever, and it wasn't good. I mean, there was nothing really good that came out of that earnings call. They lowered expectations. They were a little bit in disarray as far as a company. So it's essentially a trade. And I think that where a lot of newer investors or wheelers get into situations is now we've had positive price movement based on our entry point. So now they want to like grow their conviction because they're making money with the play.
Right.
So now they go heavier, and then they go from brag holding to bag holding. Because the shit goes against you, and it was always low conviction. So what I'm telling you is you're never going to go broke locking in a win, especially on a lower conviction play, because I would much rather have this money in play somewhere else.
So let me ask you this question. We ended up making 2,100 in about 3 weeks from this. That's not bad. For you, was it worth the stress of having to deal with it for the potential upside that this thing goes back to 20? Or was it worth the cash grab? Because obviously you could have put that money into other places. So what was the logic behind actually going through this?
The logic for me was let's nibble, because this was a nibble trade, right? This is a feeler bet in poker at these levels. But if it goes down to like 8 or 9, that presents a legitimate opportunity where the floor is here, but the ceiling could be high at 15, 16, 17 bucks, in my opinion. And now we could potentially make $50,000 to $100,000. That'd go a lot heavier at 8 or 9 bucks, but it just didn't quite give us that opportunity.
Yeah.
Because dude, if a stock gets cheap enough, and I think it has 3 to 5 years of run rate ahead of it without any issues, like I never thought that Path was going to go out of business. I just don't know that they're going to be a profitable business.
Yeah.
I was like, dude, I can make $50,000 to $100,000 here if it gives me that opportunity from a price perspective. Right. But if it's not going to give it to me, I'm not going to try to create it here at these levels because I don't really love it at these levels. I like it, but I don't love it. At $8 or $9 and nothing's changed fundamentally with the company from the information that we have right now. We get closer to an earnings report. Maybe they give us slightly better news than they did before. I'd love to position myself to make a quick 50 to 100 grand on something that didn't require a lot of work on my end from as far as brain power goes.
Yep.
So, I mean,
Right.
yeah, I mean, you're cash grab. You got to call it what it is. You're just playing the price action, but you're hoping that the fundamentals hold up a little bit on the company, and you're essentially playing for the technical bounce because it did get oversold on the technical levels.
Yep. No, I agree. 100%. And we'll see. I mean, Kathy bought the dip on 1 million share. We'll see if she ends up being right on this one.
Yeah, but she bought it at a higher price, didn't she?
Yeah, I mean, she's holding. Yeah, it's her averages up there. Okay, let's go to HIMS because this is one you made yesterday.
Yeah, so this was actually shout out to Chris Patel because he turned me onto this trade, not this one specifically, but he turned me onto this ticker a couple months ago. So what happened was Chris sent me a text and he's like, Hams, I think it's ideal to wheel. I didn't even question it. I immediately sold. I literally did zero fucking homework. I did 50 contracts after that text message, not financial advice, but I know who Chris Patel is. And I collected 1,250. And then I sold another 50 contracts later that day after doing a little bit of homework. So on the first 50, I did nothing. I did maybe 10 minutes of homework just to call it what it is because I didn't do that much homework. So I'm not going to act like I did. So I collected $2,250 for tying up $110,000, right? 1,100 share, 1,100 times 100. And was in that trade for a day. So I gave back $1,000. So I locked in $1,250 in a day off that tip. And then there was a short report yesterday. So I got a couple of text messages from my subscribers. And they're like, dude, there's a short report and we think it's bullshit. Again, no homework whatsoever. I just looked at the price action real quickly. And I'm like, I'm willing to put a flag in the sand right here at $719, $19. Did 50 contracts and I brought in $5,500.
Yep.
And that was just literally studying the technicals for maybe 45 seconds. And somebody telling me that they think that the short report is bullshit.
Yeah, and again, if it's someone
I can't substantiate any of it because I did not verify any of it. But it's because I trust the people. I trust the source that the information, I trust the information that came my way, the source, if you will. So this was just a networking play for me.
That's what I was going to say. If you trust the actual source, then a lot of times, I mean, that's kind of the cool things about having a network of people. Like, it's kind of what hedge funds do, right? Like, they'll call up, they're like Mariana, she's the Palantir Bank of America analyst. She was telling me that, when certain funds have a question, they call her, they talk to her, and they make a decision because they trust that she's the representative that knows what the fuck she's talking about when it comes to Palantir, So if you can call your HIMS guy and be like, yo, is this legit or not? And they're like, it's bullshit, then move, boom. Like when Robin got the SEC notice, the Wells notice, that was bullshit. And it went from 18 to 16. There was an easy opportunity to get shares. But if you knew someone that understood SEC notices, Wells notices are usually bullshit, then you can make quick moves from that.
So can I give a shout out to who I got the tip from?
Yeah, go ahead.
He's really, really popular on X. It's a guy named Chris.
Chris who?
Chris sells options or Chris something. I think his last name's Pena.
Okay, cool.
He's got a real big following on X, and he also has a Facebook page.
Okay.
And you follow him, y'all follow each other, but I mean, you have a lot of people on your little deal. He's always like on a boat. He's fucking surfing. He was in Australia recently. Do you guys know who I'm talking about? A guy named Chris, and he posted on his X. So he didn't message me directly. I don't have his phone number, but we do communicate. Like he's in the chat sometimes whenever I go live, and sometimes I post on his Facebook page.
You know about this guy?
Yeah, that guy right there.
Oh, yeah. This guy's awesome. Yeah.
So he posted on there that he thought that it was bullshit. And then a couple of my subscribers are like, hey, a Christian's saying that it's bullshit. It's bullshit. And they did the research, allegedly. I don't know if they did or not. So we just went off of what Christian was saying. And and I screenshot all of his trades because he posts them on a weekly basis. So I verify a lot of this stuff, and I can vouch for him. He knows what he's doing. So
All right.
that's how 5,500 showed up on the scoreboard. So how do you feel about it?
No, I'm good. I think I read through the short report yesterday as well. I kind of feel like it's bullshit too. I mean, it feels like someone just wanted to come at them. Now, I don't know as much nuance about the report, so there's a argument that it can be correct. But I have a friend as well that is big into hymns, and he was in a Discord, and I was just chatting with him, and he said it's stupid. And so, yeah, I think sometimes you have to trust sources that you believe in. Ultimately, you have to press the button on the brokerage. But if you trust the source, then it's not a bad play that we made in 19.
All right. So what else do we have here? You want to talk about one that's been really, really good for you? TSLO?
Yeah, let's do this one. Yeah.
So we're up substantially 82%. This expires we entered into this one on 6/18. So what is that, 10 days ago?
Yes.
And it expires on 7/12. So I guess we can play a game, right? To be or not to be, to close or not to close.
I think we close, dude. I don't think we hold for $500. I think we close it.
I agree wholeheartedly. And how many contracts is it?
So we got, so for those that were, so I think someone was asking, how do you buy to close? So we have, I think 10 contracts or 100 contracts. We are going to give back some of the premium that we got from the market. We're going to get 5 cents a contract, $500. So we're going to release $70,000 and we're going to recognize 2,800 of premium.
And there it is. You'll see there that it filled already.
See, and again, this is why I like wheeling. Although it's not the dopamine hit of picking a stock and then getting it right after it explodes because you have some options. Collecting $2,800 in 10 days. Yes, it took $70,000 to collect that $2,800. But if you have a large portfolio, I'm sure there's people in the chat that have a couple million, high six figures. There's a lot of ways you can utilize that money to make money in the short term, even if it's 1 or 2% on your money, without having to, buy an option and hope the stock goes to the moon in order for it to make money.
So there hasn't been a lot of trades on here, Mitt. In April the 15th, we brought in 1,300. We rolled it. Remember, this one's the one that the first cash secure put that went in the money and we rolled it.
Yeah.
And we got $200 for rolling it. And we went from a $6 strike to a $5.50 strike to take a little risk off the table. And we brought in a net credit for that. And then we bought to close. So we got 1,500, 13 plus the 200 on the roll. And then we gave back 500 of those dollars. So we locked in a small win. And then on May the 16th, we got 2,700. And we started buying back to close these contracts. We gave back, whatever that is, like 1,700. So we locked in another grand. And then we went heavier. We did 200 contracts. We got 8,400, and then a day later we gave back 7,000. So we locked in another 1,400.
Right.
And then on May the 23rd, we did 100 contracts. We got 2,800. A day later, we gave back 1,700. So we locked in another 1,100. So we just been cash grabbing this thing the whole time. Then we brought in 3,000. We gave back 1,500 8 days later. So we locked in another 1,500. And then what we just did recently on June the 18th, we locked in, we got 2,900 for tying up 70 grand. And then 10 days later, which is today, we gave back the 500. So you guys can see there that we've realized 3 or 4 wins on TSOL and haven't owned 1 share. So it's going to be real hard to make an argument that cash grabbing doesn't work if you pick the right strikes, the right underlying, the right setups, etc. Because we didn't stay in these the whole way. Like whenever there were some spikes, it's an ETF, it's a leveraged ETF. At that, it's extremely volatile, and it's tied to the underlying, which we really believe in Tesla, but it's not the underlying.
And Tesla's up at 200 today, which is why it's spiking up.
Yeah. So do you want to do a teaching segment on covered calls gone wrong?
Yeah, let's do it. Let's find a covered call gone wrong.
Well, I got one. It's called Tesla.
Oh boy, here we go.
So first thing, Amit, what have you learned? You got a covered call that's in the money. What's the first thing you want to do?
Cry?
Well, I mean, maybe, but that's not going to be profitable for you. So after you cry, what do you want to do? What are you supposed to do? It's right here. The answer is going to be right here.
Oh, calculate the intrinsic extrinsic value.
You got to know how much time is left in this option, how much time is really left in the option. And I'm not talking about, well, just, the expiration date 7/19 and we're over here at 6/28. That's how much time's left. Now let's talk about how much time in the context of money is left in the option.
Right.
So it's going to be the 190 subtracted from the 201 current share price, the strike price from the share price. That's going to be your intrinsic value. So
Yep.
1124. You're going to take that coefficient and subtract it from the options price. So that's going to give you about $6 and some change of extrinsic value. So the question that we're always having to ask ourselves is, how at risk am I really of having these shares called away from me prematurely? And prematurely meaning before the expiration date.
And real quick, TJ, the credit you got was 11. The average credit you got was $11 on this one.
Yeah. So let's go into that's a good question. Let's go into the context of this. Let's go into the genesis of the issues, right? So we go here. You can get full transparency on this segment. That way you really know what's going on. So I thought it was a good idea to sell covered calls against these shares and leaps, mind you, because I only own 2,500 shares, 15 leaps. So I'm running the poor man covered call campaign in conjunction to owning the shares and selling covered calls. So I picked up $13,201 on June the 14th. I entered into a 14-day trade and picked up $1,300,201. Didn't work out. Because Tesla started going up. So I was like, okay, cool. Well, let me roll these bad boys. Right. So I'm going to find the roll, and that's right here. So on June the 26th, so a couple of days before expiration, I was like, this shit ain't going to work out. Well, let me put some more time on the clock and get some more money. So I rolled from 185 to 190, added another 3 weeks to the contract, and picked up another 10,100. So you add the 10,100 plus the 13,000 from the original trade, and that's how much premium we've actually collected. So if the market value or the average credit shows more than that, then it's taken into account the fact that I actually lost money on the original covered call whenever I rolled it, because that money just doesn't go under the mattress. We can't just sweep it under the rug. It happened.
Right.
So let's add the 13,201 plus the 10,160. What does that give us? About
basically 23 in premium.
So that's how much premium we've actually collected. So now let's look at the actual option now. If Robinhood wants to pull it up for us, it's going a little bit slow. So now we look at the actual option here, the 190 strike, and it has a market value of $66,000. And we collected how much? 24, give or take?
Yeah, yep.
So can you see how that's no bueno all the way around?
Yep.
So right now, the best course of action is to do nothing and collect this theta right here. But we also have to study the rest of the Greeks. We know that for every dollar that Tesla goes up, we're now going in the hole another $71. Right. That's the reality of it.
Yep.
So at some point, if this starts really looking like we're going to have these shares called away, because Delta is going to be either -1, 0, or +1, depending on what type of trade that you have set up. It's a conversation for another day. We can get into the weeds on that. Like, why do you have negative Delta sometimes? Why do you have positive Delta sometimes? That's a 10-minute conversation that I don't want to have right now. But bottom line is, this is definitely not looking good. So a lot of people would probably panic and be like, I don't want this stress. I want to stay out in front of the stock. And there's nothing wrong with doing that right now. It's just not the most profitable thing to do, because the risk of early assignment is actually very low. Why is it low, Mitt?
Well, no one's going to exercise a contract at that price when they can buy it at the open market, essentially.
Well, they're buying it from us at 190, though.
Oh, right. And Tesla's 201. So theoretically, they would be getting a cheaper price, right?
Right. But then what's going to happen to the rest of the money on the contract? Because we don't have to give it back. They would have to give it back if they want to buy our shares because they're tied to a derivatives contract. So you're
Ah,
derivative, right? So you got to
yeah.
learn what the fuck derivatives are if you're going to be calling yourself that name.
So
So
hold
what
on.
the rest of that derivative?
If they exercise and they buy it at 190, you're saying they would also have to pay the 1658 as well.
Facts.
So it would actually be
They don't
200.
pay all of it because some of it's intrinsic. They're gonna have to pay back that extrinsic. In other words, they're like, I know that if I just wait for the duration of this contract, I already have a contract in place that says I can own these shares at 190, even if it's trading at 290.
Right.
But if I want to own them today, I have to relinquish some of my built-in profits of this because this option is going for 1660. But I don't have 1660 of intrinsic value. I've only got 1132. So my question to you and to the audience that's always shitting on covered calls, who's going to make good on that extrinsic value? Not me.
So they would have to give up 16 minus 11, right?
They'd have to go about $5 a share.
Plus the 190. So that's 195, which is still cheaper than 201.
It is, but I guess I always ask myself, what's in it for them? Why would they want to do that now when they already paid for the rest of this contract to let it play out? Like what is in it for them?
Right.
Are they going to receive a dividend from Tesla for taking ownership of the shares today? Like, why are they incentivized to own the shares today? That should be on a t-shirt. What's their incentive to own the shares today? Comment on the chat because you guys always have a lot to say about this kind of stuff. So now I'm giving you an opportunity to fill in the blanks on the exam. It's not multiple choice. I want you to think. And I'm telling you, they don't have a big incentive financially to do so. So all of the stress that you have in your head, it's just shit that isn't really that real. You got to focus on the numbers.
Now, if Tesla was 280, they would have the
different game.
Yeah. Yeah.
That's a different game. Totally different game.
Have you ever gotten shares exercised early, called away from you?
Yes.
And has the situation been that the stock ran up so aggressively that that's when it happened?
Yes.
Okay. Yeah, because I would imagine it wouldn't happen in a situation like this.
Yeah. And dude, I actually had shares called away that weren't even in the money. It happened on SoFi. I got shares called away at 7, and SoFi was trading at 690 and some change. And
why would you
want to own my shares at 7? But okay. And it was really, and I got some put on me too. Like there was 300 shares that I had put on me. And I was like, this is weird. These aren't even in the money. But 300 SoFi shares got pulled on me. So I'm telling you, if you're playing SoFi, there's a lot of people with very, very low IQs on the other side of the fence. Be careful. Because you can't control what the counterparty does, and we don't know how these marriages happen with pairing up the buyer and the seller on the Robinhoods of the world. We all have suspicions, but we don't really know how it happens. It's supposed to be pretty random.
Yeah.
Because you know that you're not with the same counterparty the whole way through, right?
Yeah.
Like, I mean, this shit is like an ongoing option.
I believed it was always algorithmically paired, and there's tons of stuff we don't know about how they match the contracts. But
yeah, I don't know. So anyway, here, not doing anything. I'm not doing anything, but I also have to assume that risk, because what's the risk? The risk is I have these leaps that are printing money. So let's talk. I'm going to give you guys some gold right now. I have these leaps that are printing money. Amit, would you agree that 51% on a $75,000 investment up about 50 grand, 40 grand, that's looking like Chris Patel type shit, right? Like where you put up a little bit of money to make a lot.
Yep.
So I risk losing out on a lot of this profit if I were to have those shares exercised right now.
Right.
Because all of that extrinsic value on the leap that I paid for would go away. I'd get a notification from Robinhood, though, because I have a thing called Do Not Exercise My Contracts. It's a form that I filled out with Robinhood. So they would notify me and be like, hey, they want their shares. You don't own the shares because I only own 2,500. But
Right.
I have covered calls on 40 contracts. So do you guys see that?
The
Give a thumbs
leaps
up
are,
in the chat if you follow what's going on here.
yeah, the other 15 leaps are defending your covered calls, essentially.
Correct. So I don't want them to exercise these. So Robinhood's going to do me a solid and be like, hey, you need to go buy 1,500 shares to deliver these right here.
Right. Right.
So I could close it on my own volition and be like, okay, cool. Let me go. Like if I just want to lock in the win, that we just do the math. It is $1,690 times 15. So put that, whatever that is, Amit, 1,690 times 15.
That is 25,000.
So 25 grand. So that's how much money I could pay back right now and get out of the covered calls for the leaps. And then I could just turn around and sell the leaps and wash my hands clean and lock in about a $17,000 win.
Right.
If I do it, if Robinhood does it, I'll probably end up losing money because now I got it. I'm gonna all the money that I'm up on those leaps. I'm not really gonna realize that.
Correct. Yeah.
Because of the order of operation, the way that they're going to do things, because they don't have my best interests at heart.
These are sticky situations to get in, and so it takes a lot of practice and experience to learn how to navigate them. But on a day when Tesla runs up the way it is, yeah, you gotta consider that risk. Now, when do you think of rolling that contract for Tesla?
Whenever it gets a little too, and keep in mind, I'm only going to look to roll the 15. Because on my shares, I don't give a shit. I own these shares at 197, I think. Let me go over here. I own these shares at 196. I've agreed to sell them at 190. And I have sold so many covered calls and cash secured puts on Tesla that my adjusted cost basis is like 130. So I'm going to be stingy with my extrinsic value. You follow me?
Right.
And I don't believe Tesla has any reason to run to 250 or 300 right now, because last time I checked, they aren't really selling cars hand over fist. We're betting on a fucking robo taxi, and my son has a Tesla, and he's like, Dad, this FSD is not there yet. Don't believe all the bullshit and all the hype. This thing tries to kill me on a daily basis. So I'm just saying, dude, I have intel too from someone that's very, very precious to me, and he's not going to lie to me about the technology that he has in his car. And I have reason to believe that his Tesla, like everybody else's Tesla, when it comes to the FSD. And in San Antonio, Texas, that ain't working so well. So I'm just like, okay, cool. Let's wait and see. I know 8 robo taxi and all that's fine and dandy, but valuations matter. And I just don't think that right now, right here, Tesla is a $300 company. So I'm not buying into that narrative. They got things to prove. So I'm in wait and see mode. And if these shares get called away from me, Amit, I don't give a shit, bro. I would just turn around and sell 25 cash secured puts at 190. And I'll do that 3 or 4 or 5 times to get premiums that I left, or money that I left on the table. And once I'm satisfied with that number, then I'll inch it up to like 195, and I'll do that several times, and I'll inch it up to 200, and I'll follow Tesla back up that way via cash secured puts, kind of the way that we've been doing with TSLL the whole time. And we never owned any shares, but we still made money. The money's still green.
I agree.
So I'm just not emotionally attached to Tesla, because I don't buy into the narrative that it's going to $300 and $400 right now.
Okay,
and I think it'll pull back. I mean, I study the technicals as well.
Yeah. And I mean, look, it's a good breakout, but I don't, 250, 260 is a little tough for Tesla to get there. So
what can we do to defend it? Let's talk about it. What can we do to defend it right now besides rolling? Rolling's cool, but that's rookie shit. There's other stuff that we could do to defend it. One is I could buy more calls.
I was about to say, yeah.
That's one that we could do. We could look to buy more calls, buy more leaps. Those leaps are printing. Let's buy some more. They could be cheaper, because instead of buying them at 150, fuck, I'll buy them at 200. Doesn't take that much money to do that for a portfolio this size. Another thing that I can do is anticipate that I'm going to be leaving some money on the table. Well, let me start playing for that, and let me just start selling some more cash secured puts and bring some more money to the table that way. So it's 25 contracts. So that's a lot. So let's just do it with the leap. So let's do 15 contracts. And when is it? 8/8. So let's do it for 8/2. 8/8's the day, right, Robotaxi?
Right.
So I agree to sell them at 190. Why don't I agree to buy them back at 190 then? So then I can do 15 contracts over here and pick up, you know, I don't know, let's go 708. It would get filled immediately. And I'm like, if I feel that fucking strongly about it.
So hold on. So just to walk us through this, you are selling 15 contracts, 1,500 shares, because potentially you would have to give up those 1,500 shares, and you're collecting premium, which means if you get called away, at least you keep this 10,000 premium you get. If it gets back to 190, you get to buy 1,500 more shares if you want.
Right. So this is where the reason I'm putting that right here is because this is where you get to test your conviction. If you're so damn afraid that you're going to have to sell them at 190, why don't you put a contract up that says you got to buy them back at 190 right now? And I guarantee you, 9 out of 10 of you guys aren't going to be willing to fucking do it. Me neither. Why? Because I'm not that paranoid about it.
Right.
And I don't really think Tesla's that good of a deal at 190. So I'm flipping it on your ass right now. If you're so damn anxious about selling them at 190, we'll put a contract that says you got to buy them at 190. How do you feel about that contract? Not too good, right?
Well, it's a really good thought experiment because it forces you to reconcile how paranoid you are about the shares getting called away.
Exactly. So if you're that fucking paranoid, there's a chance to pick up 10,649 to satisfy your paranoia. Go buy yourself some Tylenol. I don't know. Whatever you do, Adderall, whatever the hell you buy for your paranoia. The shit that Elon Musk is on. I don't know. But this is what I'm saying is you're not going to be that excited to sell these contracts right here because they're not really that great for us.
Yeah. And it's a green day, so the premium
at 175 maybe, but the premium's going to suck.
And it's a green day, so the premiums already suck right now. Like, you know, if it's a red day, the premiums get better. But when it's a red day, then you think your shares aren't getting called away, right?
So I'm just saying, like, do these exercises with you, and you'll be like, oh, shoot, why am I so afraid to sell them here if I'm not willing to buy them? So then it's like, how convicted are you really? And are you really long?
Yeah.
You know, because I did a whole segment on this, and we can leave with this and what does it mean to you to be long a stock? You want to do it, or we're just talking?
Yeah. I would say longest stock to me is at least 5 years at minimum, if not a decade. Like for Palantir, I really want to hold this thing till I have kids, dude. Like I just want to keep accumulating shares. I want to get to 10,000 shares at one point, and it's just there for a long time. You know,
right.
I would say 5 years at least.
So to me, being longest stock means that there's no price action that can happen that's going to make me want to sell. Nothing fundamentally, nothing technical. In other words, I don't even have to open this portfolio for 5 years, and I want those shares sitting there for 3 to 5 years. That's longest stock.
Yeah.
When people say that covered calls this, that, and the other thing, and then it's limiting the upside, etc., the reason that they don't like covered calls and they're so averse to it is because they don't want to manage that covered call for 3 to 5 years because they're not really long that stock. They want to reserve their option to be able to sell that stock at any moment. And I can use Palantir as an example because I did Palantir in our chat when I did it. I go, a lot of you fuckers would sell Palantir tomorrow if it went up to $40.
That is true.
You're not really long Palantir. You're long Palantir as long as it didn't make sense to be long. Because the minute it doesn't make sense, you're going to make it fucking dollars. Because that's dollars and cents. That used to be a segment on CNBC. So I don't want to hear your bullshit about being long. You know what I mean? You're not really long. You're long as long as your thesis isn't wrong. The minute that the shit's wrong, you're fucking out of there. So I don't want to hear your bullshit. What you're really telling me is you don't want to manage the covered call because you're not really, really long this stock. And you want to reserve your option to sell out of your shares for a profit because right now you want to be in a situation to lock in your money. Because what opportunity cost is there if you're long the stock? Riddle me that. Admit you're a master debater.
No, it's a really good point you're making
because you had this conversation with Tanner. That's why I'm giving you some pushback right now.
Oh, you saw that, right?
Yeah.
Because the point is, like, if I'm long Palantir and I know I don't want to sell to like my price of like 250 or whatever it may be, if it goes to 40 tomorrow and you want to sell, the problem is you want to realize that profit. Your argument is if you sell a covered call and you know you're going to manage that covered call, because you don't want to let the shares go, it puts more work on you, but it proves that you're long the company versus having the option to get out at $40 because then you're going to take your profits. But that means you're not actually long because if it got to $40, you should be holding. If you're long,
and I'm not questioning your conviction and not being quote unquote long. What I'm questioning is I don't think that you're that fucking stupid that you're not going to lock in a profit. That's what I'm saying. What I'm saying is that Palantir goes to a $500 million a $500 billion valuation tomorrow. I think it has the potential to be there in 10 to 15 years, but not tomorrow.
Yeah.
You're telling me that you're just going to make a point on YouTube and you're not going to lock in a profit that could change the trajectory of your family tree? I mean, you're not that dumb, are you?
Well, the insiders.
Like in my mind. And
Yeah,
they sell all the time, don't they? Granted, they have different ways to accumulate shares for working there, but I mean, they sell all the time at 26, 27, $28. I mean, they kind of might be telling you that, hey, it's good to get this money right here.
Yeah, I think it's the right philosophy. It's that if you do a covered call and you collect premium, you might get underwater, but you can always navigate. You can always push that covered call out, even if it has to be years.
If you're long the stock.
Right.
The people that are getting real angry at covered calls, they're not really long the stock, in my opinion. And that's why they're mad, because now they can't sell out of their position because they're underwater on this damn covered call. So that's why I only sell covered calls on stocks that I'm legit long on, or legit, I don't give a shit if they get called away, a la Path. Is that Path cover call stressing me out right now? I'm like, dude, take those fucking shares. I probably didn't even need to be in that position to begin with. I'll wipe my tears with the $2,000 profit and pay some taxes, whatever.
So your argument is actually, because some people would go against you and say, if you're long a stock, this is what Tanner's argument was, you don't sell the covered call because you're afraid of limiting the upside and you need to be long. Your argument is actually, no, it proves that you're long because you're willing to manage the position. Versus
I'm willing to chase my tail for the next 3 to 5 years because eventually I believe that I can catch the stock. Or at the very least, sell at a much higher price than I'm obligated to sell today.
Right. And again, the reason this is important, some people might be thinking, oh my God, you're going through so much mental stress just to manage this covered call. The point is most stocks, unless they have an NVIDIA type of year, don't run up 1% every single day. And if most stocks don't run up 1% every day, for the far majority of stocks, if you sell a covered call, weekly covered call, monthly covered call, you're going to be okay because stocks don't go up 5% every single month like NVIDIA.
There's outliers, dude. Like there was one that really did me dirty called Meta. And Meta just kept going and going and going. I sold this shit at like 215, 2,500 shares. Life altering money if I still hold those shares right now. But I made some money along the way selling some timely cash secured puts. I did it recently at the $400 level because I thought that it had gotten as active. There was like an earnings or something. It went low, and I'm like, "What are y'all looking at? Dude, it's still Meta. This shit's going to 500 or 600." And I made like $30,000 or $40,000 during that time frame. So I was like, it's whatever. But I was never really long Meta. It was a trade, and I made a couple of 6 figures on it. So I was like, okay, cool. It might have been 7 figures if I would have been more disciplined, but I'm not angry about making a couple $100,000 on it either.
So you brought up Meta. Could we end with looking at Meta put premiums? Because I was going to suggest to you, let's do Meta. I was looking at it myself.
Well, you got to be bringing up all the shit.
No, I want, dude, let's get Meta at like 470. I think it makes sense, and I would be absolutely have no problem owning Meta at 470.
Look, I'm not lying to you guys. Look at that right there.
Yeah, 1,500 shares. Yeah, let's get back in, dude. Let's get back in. All right, let's at least see the premiums. I think we can do 2 contracts.
This was on the Webull account where because I have a couple of accounts that aren't online, and I did. Was it 50 contracts or 75 contracts at like 400, bro? And the premiums were just retarded. So yeah, dude. So look, where would this portfolio be if I still have 1,500 shares of Meta? I mean, just do the math on it. You follow me? I do it all the time. Cry myself to sleep.
Oh my God.
There's Meta.
That's a lot. That's a lot of
shit. I'm saying, do you get stuff on this channel you're not going to get anywhere else, bro? Because I don't give a shit what you think about me. If I could pay bills with your opinion, it would have value, right? That's what my brother taught me when I was 12 years old when people were bullying me. You're going to grow up one day and we're going to have to pay bills like mom and dad. So people's opinions don't mean shit because you can't pay bills with them. And dude, that was like the best advice I ever got. My brother was like 14 years old at the time. And he was like, "You gives a shit what people think about you." Because I was like, Christ, I was getting bullied, dude. And it was just like people were mean when I was a kid, like a lot meaner now because, nothing was on social media. So you couldn't be tainted forever.
Yeah.
And so my brother gave me that little sound advice. And he was like, "Who gives a shit what people think? You can't pay bills with their opinion." And it gave me a lot more confidence. So anyway, Meta, what are you thinking?
So let's go to the put premiums. Let's go a month out, 475, July 26th. That's the price I like it at, but 460 is not bad either. Okay, 480 is what looking better. Yeah.
The 30 delta, bro. This is good right here.
490.
Yeah.
Yeah, because well, the meta rank.
Meta, dude. It's fucking meta, dude. It's not like it's going out of business.
It's not going out of business, and election advertising is gonna be a tailwind. Their capex is gonna finally result in, I think, ROI. Even if not this quarter, they're gonna make it obvious that it's coming soon. And there was some independent study that said June was one of their best months for Instagram engagement. So and they got a price target upgrade by like 3 different firms the other day to 550. I think Meta's a no brainer, quite frankly.
Cool. So how many you want to sell? You want to
Let's
do
do
5?
2. We only have 200,000 left in collateral on my side, but if you want to
Yeah, but I mean, I got a lot more than that. So let's do 5, bro. That way we can really feel the win.
okay, you want to do 485 or 490?
Like
490.
no, we'll go here. We'll manage it, dude. Here's my strategy on cash secured puts. I go high because I know I can always roll this shit anyway, so I might as well maximize the premium for tying up the money. Because if we're right, we got rewarded with more premium.
Is there any downside to that? You go high first, knowing you'll roll. Is there any way that goes wrong?
Because I'm willing to own the shares.
Right.
I mean, dude, if I didn't know any better, I'll just buy the shares here and sell covered calls. Call it good.
Right.
Because why are you going to sell cash secured puts on a stock if you think this is the top? Answer that on the chat, guys. I'm giving you all shit that you guys just because I'm in a giving mood today because my wife was nice last night. If you know what I mean. She give it to me, I give to you.
Oh my god. Did you watch the debate?
Seriously, think about that. Have you ever thought about that, Amit? Why would you sell cash secured put right here if you thought it was at the top? Why would you do that?
You're right. You wouldn't, of course not, because then it can keep going lower. Yeah.
I'm just saying, dude. Like this is like a lot of this shit that you guys think about, dude. We already had these thoughts. You're not that original. We all think about the same shit. I don't think the top is here. It's not even close in Meta. I think Meta can still double from here, bro.
I think Meta can get to like 750 in the next like 8, 5, 6 years, dude. Like Meta is not going anywhere. Nowhere. So Meta has earnings on July 24th. Okay. So this would be 2 days.
When do they have earnings?
I don't know if this is correct, but someone says July 24th.
So let's look at the IV. Here's the IV, 44%. Thank you for that, by the way. If somebody has that intel, because that's really important intel.
So they are right. It looks like July. I think they're right. July 24th. Yeah. On my website, it looks like July 24th. Yeah.
Yeah, because you see the IV is 28% over here on July the 19th. So if you throw the binary event into the equation over here, you see how the IV spikes a lot more to 44.
Yeah.
That's because there's a binary event there.
Yeah, and the thing is, Meta already fell from like 520 back to 398. I don't know if the street would let it fall again because all the arguments for why it fell were stupid, and obviously it's gone back up because the street realized it was stupid. So
yeah, but let's just say that it happens and we pick up shares. We'll roll it. Let's just say 475 is the price target to take ownership.
Yeah.
And then if it dips to 375, we'll just buy another 500 shares. What's the big deal? Again, being adequately capitalized, bankroll management that makes sure that you can afford these stocks. Make sure you can afford to really be in it. I don't mind restructuring the portfolio to get 1,500 shares back in Meta because I'm not angry at Meta. I'm angry at myself.
Right.
I just gave you guys $1 million lesson right there. I'm not angry at Meta for going from 213 to 516. I got angry at me. Meta didn't do shit. Meta doesn't even know me.
Well, they definitely know everything about you. That's for sure.
No, what I'm saying, that's true, right? No, but what I'm saying is Mark don't fucking know. Meta don't care, bro. What I'm saying is Meta don't care that I was in that play and I could have had a lot more money in this account, but now I'm not. So I'm cool here trying to grab some of this money. This isn't revenge trading. I just think that Meta is still a good trade, and it's a much better trade than I thought it was back then. Because if I thought it was a better trade back then, I would have done more to hold on to it. But what I did, full disclosure, is I moved that money over to Tesla because Tesla is more high conviction for me. And so far, that has proven to be absolutely just a bad play, probably one of the worst plays in my career so far. I'm hoping for a redemption story down the road. But all of that Meta money is the Tesla position that you see. So, I mean, again, I give it to you guys all here, man. The good, the bad, the ugly, the indifferent. It is what it is.
All right, let's end it on selling 5 options on Meta.
So we'll go here. Where is it? This guy right here.
See if we can get 13.
I think we might be able to.
Maybe even
medium. I like it. It's not going to happen.
Okay. We have to do 12.
Let's go. Let's go 1290. There you go.
There you go. So what is that? 1290 times 5. About $6,000.
Yeah, I'm just refreshing.
64.5. 60. So to explain to people what we did, we agreed to buy 500 shares at a $490 strike, which is $245,000 of collateral, and we got paid $6,450 above that 245, which is a 2.6% return. And again, people may think, oh, 2% is nothing. It's 2% within a month, and it's on capital. That worst case scenario, you roll the contract or you own Meta. You don't lose that money. You just own more of a stock that you already cared about.
And then when he's turning around and sell covered calls on it, big deal. But this will be the first bullet, dude. If like doing this, like in my mind, I was like, okay, shit hits the fan. I'm willing to go as heavy as 1,500 to 2,000 shares on Meta.
Yeah.
And I'll have that average in the low 400s. If it get, because I'm going to buy all the shares right here, right? Like, I mean, like I'm kind of hoping it goes to 400 low key now, because anytime I sell a cash secure put, I want the shit to tank, because then I can really put the position that I wanted all along. But right here, I'm not going to go crazy and do 20 cash secure puts. First of all, I might not even have the capital to do that right now because I got a lot of open positions. But I don't want Meta for 490, or at least not that many shares. You know what I mean? Whatever the strike price was. What did we go with? 480, 490?
490. And there's an argument. I don't think it's going to happen, but there's an argument they could split that sucker 5 times.
And that's then awesome. So at least have twice as many shares, right?
Whatever. Yeah, and it would explode the options. It would make premiums even better. I don't think it would happen, but I think Meta's in a good spot.
So what was it? 64.90 is what they gave us.
We got 64.50.
64.50. Okay, cool. So I'll have to make an adjustment over here on the scoreboard. So that puts us at about 71,000 for the project.
Not bad.